According to most prop firms, gold is the pair that people lose the most money on. However, in today's video and over the next few videos to come, I'm going to be backtesting my 5-step simple system on gold over the 2025 price action. This is the same system which I did backtest over the 2024 price action here on the channel a few videos ago, and the one that achieved results like this. So overall, we had around a 67% win rate across a whole year's worth of data, 107 trades to be exact, with a mechanical 1-to-3 risk-to-reward ratio. And this is the same system that we're going to be testing in today's video, but over the 2025 price action. So guys, the plan for today's video is this. We're first of all going to be doing an in-depth walkthrough of the exact trading plan and strategy for anybody that's new to the channel. We're then going to be doing around 30 minutes or so worth of backtesting on gold to show you guys some more concrete trade examples. After that, at the end of the video, we're also going to be going through some of the analytics behind the strategy so far. And like I said, this is going to be the first part in a series where we backtest the entire 2025 price action on gold to show you guys as many trade examples as possible. So with that being said, let's head right over to the charts and let's get straight into it. Okay guys, so as mentioned, before we get into the backtesting itself, let's just do a quick walkthrough of the trading plan and strategy itself. By the way guys, I'm also going to be leaving this trading plan document completely for free for you guys to download in the description below as well. For anybody that has already seen any of my previous videos, you can go ahead and skip to the backtesting itself. I'll leave the chapters at the bottom of the screen. But for anybody new, let's just walk through this first of all. So, first of all, every single time I come to the charts, the first thing I'm always doing is identifying higher time frame market structure and direction, and I'm primarily doing this on the daily and 4-hour charts. So all I'm simply doing is coming to the charts, identifying whether price is in a bullish trend or in an uptrend or in a downtrend. And to do this, I'm marking on some of the key structure points. So on my charts, you can see the notation C and B. C is simply a change of character and B is simply a break of structure. All I'm doing here in step 1 is marking on any of the breaks of structure just to make it a bit more clear for us to identify whether price is in an uptrend or a downtrend, and also to see the most recent structure, right? Next, I'm also breaking this down to the hourly and lower time frames just to get a more refined and more in-depth picture of what price is actually doing, whether it's in a pullback phase, whether it's in a reversal phase, whether it's just consolidating, and so on and so forth. And I'm really just breaking it down to the lower time frames just to really gauge what the overall picture is, where price is in relation to the overall trend. And what I've also said here is that I'm drawing on previous mitigations. And what I simply mean by that is, if we scroll down a little bit, right, is so first of all, after we've marked on the structure, right, we can see that price has retraced back up, reacted from this area of supply, and then pushed away. By a previous mitigation, all I very simply mean is that price has reacted from this area and pushed away from it. That's essentially it. So a previous mitigation is just when price has reacted from an area of supply or demand in the past. And the reason why I'm marking these on, you can see I've got a white box here, which basically represents a mitigated area. The reasoning behind this and why I'm marking it onto the charts is just so it clears things up a bit, and so we can see, you know, where has price reacted from in the past, and therefore where is it likely to react from in the future, where are our valid points of interest, which we'll come to in step 2 in a moment, and also where is price likely to gravitate towards going forward, right? So in summary, all we're doing in step 1 is identifying the key market structure, daily and 4-hour, then breaking it down to the 1-hour to identify any of the more refined structure, and also making sure to draw these onto the chart so we have this kind of overall picture that we're building surrounding price, right? Now in step 2, this is where we're actually going to be identifying areas where we're looking to buy or sell from, and this is going to lead on from step 1 because we need to know the higher time frame narrative and direction in order to do this. So essentially, if price is in an uptrend, I'm only looking to buy. If price is in a downtrend, I'm only looking to sell in line with this overall higher time frame direction, right? And for myself, a valid point of interest is essentially an area of supply or demand within the current trend leg. So here we can see price was overall bearish. This was our most recent trend leg. I'm looking for an area of supply that price could pull back into and react from. Here we can see this area, right? This is the area I'm looking to sell from. It's within the current trend leg. It's a clear area of supply. So this is what I'm looking at, right? I have a few other criteria for this, The main one being that it needs to create imbalance. And the reasoning behind this, once again, just explaining the logic, is whenever you have an area of supply or demand, right, that creates imbalance, it shows that it's a very clear level that people were willing to sell or buy from in the past. So the theory goes that once price retraces back up into this level, price is very much likely to react from that level again. So we can use it as a point of interest from which we're looking to sell or buy from. Sell in the case of a supply and buy in the case of a demand. Now, the other confluence and criteria that I have to validate one of these areas is that we need to see some liquidity being swept into them. So for example, in this case right here, you can see these previous highs were taken out into that area of supply. And obviously it'd be the opposite case for buys. We would need to see some previous lows taken out. And that is very simply it. So just to recap, a valid point of interest for myself is an area of supply or demand which creates imbalance and which has liquidity above if it's a demand or below if it's a supply. And that is very simply it. And that's what we're doing in step 2. I've included a few more nuanced details right here, but that's not really the point of this video. So I'll let you guys read through that in your own time or download it in the description below, as I said, completely for free. Now, step 3, and this is one of the key components of this strategy. And once again, the logic behind this, right, is once price comes into our point of interest, we don't want to just blindly buy or sell from this area because we don't know whether price will want to respect that level or whether it will want to go straight past, for example. So that is why we're always waiting for this idea of a lower time frame confirmation. And to make things as mechanical and simple as possible, I'm always using the M5 time frame to identify the lower time frame structure. And all I'm waiting for is once price, let's use an example of a buy. If price comes into a higher time frame demand, I'm waiting for the M5 to flip back bullish. And more concretely, what this looks like is price breaks above the most recent lower high. So all I'm waiting for to buy in an area of demand is I'm waiting for the M5 to create a higher high and end the downtrend in structure, right? And again, this will become a lot easier to see once we go through some chart examples. For a sell position, I'm looking for the opposite. I'm looking for the M5 to be bullish into our area of supply, and then I'm waiting for it to create a lower low, breaking past the most recent uptrend in structure and confirming that flip back bearish over to the downside, right? And this is kind of giving us an early indication as to whether price wants to hold the area of demand or supply, and therefore we can kind of get the upper hand on price, right, and kind of forecast and get in the move before it actually happens. And like I said, this is a change of character. Always simply waiting for anybody familiar with the term, is a change of character on the M5 time frame. I'm then simply entering on an imbalance that was created by price, and I'm setting a limit on these areas to get my entry. Step 4, this is when things really start to become crystal clear and more mechanical, is once I'm in the trade, I'm simply mechanically going to target a 1 to 3 risk to reward. This is one of the key components of my system and something I really like to emphasize to the guys inside VIP, which is that if you're using this mechanical TP rule, right, it's very, very simple and repeatable, and there's no discretion involved or uncertainty involved in where you're targeting. Because what I've personally found over the past 5 years I've been trading is that the more kind of discretionary and ambiguous you make your TP rule, the more room there is for human error to creep in and for you to make stupid mistakes like holding past your original TP and so on and so forth, right? So making a mechanical TP rule like this is just massively beneficial, I personally found, and that is what we're going to be testing in this video today. Now, also, before we get into the risk management side, 1 to 3 is not just a random number I plucked out of thin air. It is the optimal risk reward I found based on over 5 years worth of data that I've collected. This was the best approach that I personally found, whereby the win rate is sufficiently high, but also not, really, really low. Because you could also use, for example, 1 to 10 risk reward and accept that you're going to have a 10% win rate. But psychologically, that's not really manageable for most people because you're going to be losing a lot of trades. So 1 to 3 is that kind of optimal middle ground that I've personally found. As for risk management, all we need to know for the sake of this video is that we're doing 1% risk per trade. I'm not making break even and I'm not taking partials. Again, this is the best approach and most profitable approach that I found after collecting all the data on it. What I've personally found is that actually holding to stop loss or take profit is the most profitable approach when compared to making trades break even or taking partials, right? I've included a few more nuanced details about how I manage different prop firm accounts, different combinations of prop firm accounts, when to scale up, and also some key processes as well. I won't go through those in this video, but you can download this for free in the description to go through in your own time. But that is essentially the strategy that we're going to be testing in today's video, guys. So let's head over to the charts now, and let's get into some actual trade examples just to clear things up a little bit, because at the moment this is only really theory, and it will become a lot more clear once we get into actual trade examples, right? So let's go and do that now. Alright guys, so over here on the charts, let's start off on the daily time frame, like I said, to gauge that overall higher time frame direction. So first of all, what we can see coming into the year 2025, we can see that price has swept all of these previous lows. So in particular, grabbed this low, and overall, if we zoom out to the very high time frames, you can also see that price was very much in this bullish trend, right? So once I'm seeing this, I'm instantly going to be kind of trying to position myself into longs in line with this overall bullish direction, right? So here we can see price has retraced down, swept some higher time frame lows, and then pushed on over to the upside. So the idea here is to look for continuations higher. If we jump over to the 4-hour chart, we can also see that as opposed to before, where price was in this downtrending structure, price then swept that liquidity to the left, created a higher high just here. This is important, by the way, like where this change of character happened, and this is something I like to emphasize to the guys inside VIP, which is that changes of character happen all over the place, right? The key is to know when they're going to lead and when they're likely to lead to a move higher. And typically this is going to be the case when higher time frame liquidity is taken out. So that is to say, I wouldn't have considered this a change of character if price had not taken out higher time frame liquidity to the left, and I would have been looking for more continuations lower, right? So what we can see is price has caused that change of character after the higher time frame lows were swept. We've now had a sweep of these kind of two equal lows that we had right here, and also price has tapped into this area of demand, as you can see. So what I'm thinking here, now that these higher time frame lows have been swept into the area of demand, which caused this change of character, we could be looking for some buys here. So if we jump over to the 1-hour time frame, so currently price is still bullish, right? This would be the most recent breaker structure. So at this point in time, we can still say that price was overall bearish. So there's not really anything I would be doing here, to be honest, because like I said, we're looking for mainly buys because price has swept liquidity into the demand. But as of right now, price has not really shown any clear intent to the upside and is really just in this consolidation. So I'm just going to let this play on a little bit to see what price wants to do. Right, there we go. So price is very clearly moving over to the upside. We've now had a clear change of character back bullish on the hourly time frame. So right now, you can see all of the time frames are starting to realign. We've had change of character here. Price comes back into the demand, and then this downtrend right here, which was internal, also starts to end, and you can see that clear momentum coming back into the charts. So what I would be looking for here is a retracement lower to maybe capitalize on some more buys. At the moment, I'm seeing, the only real demand we have in this range between the low and the high is this one right here. Maybe if price can retrace back into this level, we can look for some buys. Just zooming back out. There's not really anything else I'd be looking for here. This is kind of the only demand. If we zoom in on the hourly, maybe this one. We also have this kind of one down here. Also, this is highly dependent on whether price wants to pull back or not. Obviously, it might not want to. If we just zoom out real quick, I would also be a bit cautious of this liquidity level. That's when we might see the pullback, just because this is the last liquidity. Here you can see on daily time frame, that's the last liquidity before you have this imbalance. So just being cautious of that, but looking to buy up into it. If we go down to lower time frames, there's still not really a clear point of interest unless price wants to make its way back down here. So let's just see how this kind of unfolds. Really just kind of consolidating at the moment. There's not really much going on here. Okay, so that liquidity level has now been taken. So this is when you can kind of start to anticipate a bigger retracement, especially after a huge move like this. One thing that gold always likes to do is when it makes these imbalanced pushes, it really likes to come down and fill the whole move. There we go. So we're getting a bigger retracement now. Price has tapped into our first demand and taken out all of these lows. You can also see here, right, it doesn't really have any clear intent to the downside. It's just kind of moving back quite slowly and correctively. So as mentioned in the trading plan, what I do inside these points of interest is I'm jumping down to the M5 time frame and I'm waiting for price to flip back bullish in line with the overall trend, right? So in this case, I would be waiting for price to break and close above the most recent lower high, which is this one right here. So if we just play price forward a little bit, right, there we go. So now we have that clear confirmation. This is our change of character, which I'm going to mark on the chart with a C. Do we have an area of imbalanced demand? Yeah, we have this area right here. So this becomes a valid trade. I'm going to set my limit on this area with stops just below the low. And as I mentioned in the trading plan, we're doing a mechanical 1 to 3 TP to remove any of the discretion. And yeah, let's set this trade. Let's see how it goes. This is a completely valid trade. All of the confluences are aligning. Oh, damn. So that's annoying. Price missed us by around a pip there and rallied to TP. So what I would do now that price has got quite far away from us, I would actually cancel this limit. I don't want to try and catch a falling knife if price comes all the way back down to here. So what I would be looking for instead, it has kind of, so it's come into our demand POI, right? Swept higher time frame liquidity. It has continued to push up. So what I'd be looking for now is maybe a retracement into a new area plus another confirmation. So we have this area of interest right here. Price wants to pull back. Okay, nope. So obviously price did not respect that level. What we can look for now is for price to come to the lower demand down here, right? There we go. So price has now tapped into that lower demand. Very nice rejection so far, as you can see on the hourly time frame. So if we just head over to the M5, yep, so we've had another entry confirmation right here. You can see lower high, lower low. Price then creates a higher high inside our point of interest, causes a change of character, and we have this area of imbalanced demand right here. So I'm going to set a limit on this area. This becomes a valid trade. In this case, there's not really any reason to have stops all the way below the low, and the reasoning behind this is just because if price breaks this area of demand, there's nothing below it that it could react from before going to the low. So essentially what I mean is if price breaks this demand, I no longer want to be in the trade because our analysis is probably wrong. Again, just going from mechanical 1 to 3, and let's see if this tags us in. No, might be another missed trade here. Let's see, does it want to pull back for us or not? Still valid at the moment, so I'm going to keep the limit. Let's see, doesn't look like it wants to pull back for us here, guys. Yeah, okay, so that's another annoying case. Price didn't want to pull back for us. We can see now, though, that it has kind of very clearly broken higher and it's heading back towards the previous highs. What I would be looking for here, so you can kind of see now we have also had an hourly change of character plus an area of demand created right here. So what I would be looking for is, notice as well how price is retracing before sweeping the high, and now we've got the situation where we've got these kind of equal highs above. So what I'm looking for here is for price to respect this demand and then maybe give an entry from there. Let's jump over to the M5, let's have a look. There's not really any structure here at the moment though. You can kind of see price just came down in one impulsive move. So let's have a look. There might not be an entry here, even if the demand is respected. Yeah, there we go. So price did end up respecting the demand, but you can see here there was no change of character, just came down in this one impulsive move. So that's not a trade that I would have entered, even though our analysis was correct. However, what we can see now is price has broken structure again. So we can look for another entry opportunity. Very clearly now as well, if we just zoom back out to higher time frame, there's not really anything stopping price from kind of gravitating back towards this previous high, right? So what I'm thinking next is we could see price just continue up into these highs. One thing I would consider actually, just looking at this, you could still view this from one of two perspectives, right? One of the perspectives is that this was a 4-hour change of character, which in that case, I would probably monitor this area of supply or a sweep of the top of it. And one thing I always like to emphasize inside VIP as well is that you don't need to be right about higher time frame direction when you're using this idea of liquidity, because very often what you'll see, for example, is if, for example, this daily liquidity is swept, you will see some sort of reaction like this before price goes higher, but you can still look to capitalize on this because you're looking at liquidity and you realize that price is very likely going to push away from this level, right? So you can be wrong about direction, but still capitalize on trades using this idea. My next idea for the buys though, up to that liquidity level, we have price now retracing into this area, very clear demand zone. So if we just jump down to lower time frames, yeah, this is a valid point of interest. So let's see if we can get an entry here. Might be another no entry situation though, because it has just come down in this one impulsive move. Yep, so that's annoying. Another situation, price didn't present an entry. That's fine. On to the next. We've now had another break of structure higher. Let's have a look. Not really seeing another point of interest here. Price is quite, choppy here. It just came up without any imbalance. Very efficient price action. So let's have a look. Could see price maybe kind of have this demand. It was already tapped and mitigated, but because it is such an obvious area, I would go off it again, especially just looking at all of this momentum that price has at the moment. So let's have a look, see if price reacts to this area. It currently is. And have we had a change of character? Yeah, so price has given us the change of character right here. We've got an area of imbalanced demand as well, right here. So this is actually a valid entry. If price can retrace into this area, I'm going to set my limit here. Stops below the low, and again, mechanical 1 to 3. Let's see if this retraces for us. Nice slow pullback at the moment as well. That's ideally what we want to see. Let's see, the trade is still valid at the moment. Okay, nope, so trade is now invalid because price broke the main high, which is this one right here. Next idea, maybe if we can see a sweep of Asia low into this extreme. So the extreme being the lowest demand in the range, in the current trend leg, sorry. Damn, okay, so price respected that POI perfectly, but this was probably some sort of news. You can see it just wicked it and then went. There was no opportunity to enter there. Right, nice. So price has now wicked out that daily liquidity that I mentioned as well. As you guys can see, it is still overall bullish, but what I'm thinking here is we could maybe catch a counter trend move down based on the fact that it has swept this higher time frame liquidity. If we're looking for more buys, what I would look for is maybe a sweep of this wick. This was a very obvious news wick. So maybe if price can come back down to there. But let's also look to see if we can get a counter trend sell here. Obviously, I still need to see price break back bearish first. Like so. So we've had, did it sweep that high? Yeah, so you can see there, it swept the high. Gave us a change of character right here. In terms of entries, actually, to be honest, I'm not really liking sells here. It's still quite bullish, so I'm going to leave this one, to be honest. Actually, no, I like this now. So it's created another break of structure to the downside. We've got an area of imbalanced supply right here. I'm going to enter here. We should have entered on this actual supply zone, but I played price slightly too quickly. We can probably get a 1 to 3 still on this, so I'm going to set this limit. Sorry, market execution on this one. Oh, almost stop loss on that. Let's have a look. Yeah, nice, there we go. So 1 to 3 hit on that. Like I said, even if price is bullish, you can still kind of anticipate a reaction from the liquidity. Now, if we're looking for more buys, Like I said previously, you can very clearly see that we have this obvious news wick. So if this liquidity is taken out right here, this is my next POI for the longs. Right, there we go. So the liquidity now has been taken out. You can see as well, overall trend is still bullish. This is probably just a correction for higher prices. Actually as well, we also have, I've just noticed, you can see this 4-hour demand below that liquidity. So this is looking very nice. Again, jumping over to the M5, let's see if we can get an entry here. Okay, so this would be the change of character, but I need to see a closure above it rather than just a wick above, which we have at the moment. Right, there we go. So we've got that clear change of character, right? Where could we enter from? We have this area of imbalanced demand. Price wants to retrace. And on this one, I would want stops below the lows and mechanical 1 to 3 TP again. So let's place this. Let's see how it goes. Let's see if price wants to pull back for us. So far, we haven't had much luck with the limit orders. Price hasn't really pulled back for us. This one looks to be doing the same thing, actually. Actually, I'm going to slightly change the entry to this demand right here. Reasoning behind this is we've now seen price continue to push up, create Asia low above this area of demand, and I'm going to still have stops below the low just to be a bit conservative with this. So we'll place this. Right, there we go. So we're tagged into this now. It's not looking the best, I'll be honest. The demand didn't hold. But as always, stop loss or take profit on these trades. Oh, okay, so that's looking pretty good actually. It has held. This is one thing gold likes to do as well. A big tip for you guys is when looking at gold, watch what happens after the demand zones or supply zones are swept, because price will very often do this where the demand itself won't hold, but price will sweep it and then make the move. Let's see. Yeah, there we go. So TP hit on that one. Very nice stuff. Rinse and repeat in the same thing, right? Just sweep a liquidity into POI, change of character, plus imbalance, and then enter. What I would look for now is maybe, so I'm kind of looking within this range, right, for price to continue to buy up towards the high. We have this area of demand right here. This would be the next POI. And actually, if we just go over to lower time frame and mark the structure, we've had this being the initial change of character. Price pulls back, held the demand, broke structure, once again pulls back here, mitigates demand, breaks structure again. So this is very much the current trend leg between the low and the high. So if we can get an entry from this demand, this would be my POI. As always, heading over to the M5 for the entry. Yep, there we go. So we've had our change of character. In terms of entries, we have, so in a case like this, right, we have this area of imbalanced demand. We also have this one below it. What I would personally do in a situation like this is I would wait for price and see if it builds liquidity above this one. If not, I would enter from this lower one because I want to see some liquidity taken out into my entry zone before entering. Or price might just want to push straight up into the high. Yeah, there we go. So this obviously, this change of character becomes invalid once price breaks the main high. So next idea, see if we can get another entry. Okay, so it has now also broken the external high, which was this one. If we get rid of this, it was this one right here. Still very clear bullish price action though. If we just zoom out as well, one thing I like to do is I'll periodically zoom out and have a look at where the next liquidity level is. So in this case, the next liquidity is at this high. So I'm looking for price to buy up and target this next area. If we just mark that on with a line, just so we know when that level is hit. Because once price takes those key liquidity levels, you know that there's a high probability that it does reverse from them. If we just mark that on with a line, just so we know when that level is hit. Because once price takes those key liquidity levels, you know that there's a high probability that it does reverse from them. doesn't seem to be pulling back at the moment. Next POI for me would be, we have this area of demand right here. Also, one thing I'm doing is I'm considering the momentum, right? So we obviously have, for example, this demand all the way down here, but just looking at all of this momentum, right? Is it likely that price pushes all the way down to that level? Probably not. So I would more so focus on these nearer term levels. So this one in particular, price is still hovering below the liquidity as well. So this is going to be a nice opportunity for us to get back in. So yeah, let's see if it respects this POI that we have right here. If it retraces. Yep, there we go. So price is retraced into the POI. I think this is the Asian session though, so let's just fast forward that. Here in the UK, I don't trade Asian session because it would be overnight. Okay, so Asia low taken out. Price is still in the POI. Right, we've now had a change of character on the M5. Plus some imbalance created. With this one, you know, you could wait for a retracement into the demand, but the risk to reward is already going to be worth it. So I would just rather enter market execution here, like so. Let's have a look. Oh, that one came in clutch. Price pretty much wicked the stop loss and then rallied to TP. As always, good stop loss placement is positioning the trade, the stop loss a little bit below the low, because price could, and it very often does on gold, wicks out the low and then presents the entry. So here, for example, we've had a wick of the low, then you see the change of character. So this is actually another valid entry, right? Because price is still in the POI. We've had a wick out of the lows, change of character, plus an area of imbalanced demand right down here. So I'm actually going to get back in this because this is another valid entry. If I set my limit here, stops below the low, and again, just simple 1 to 3 TP rule. Let's see if this pulls back for us. Limit order this time. And I'll just play this higher time frame for you guys so it's a bit quicker. Right, so we're tagged in again. You can also see as well, price did come into this kind of refined demand zone. If this one fails to hold, we can maybe look at, you know, a lower one. At the moment though, this is a valid trade, so I'm gonna stay in this. Okay, no, so first loss of the session there. It was a valid trade though, so that's completely fine. Next idea, you can see price has now come into this lower demand, still overall bullish, and this is exactly what I was talking about as well. So notice here, price did not actually respect the demand, but it swept the demand low and then makes the move. Gold does this very, very often. Like I said, where it doesn't respect the demand, it sweeps it and then continues over to the upside. So looking at the M5, we can see we've had a change of character. So our entry confirmation was here. I'm just going to fast forward Asia though, because obviously I don't trade it. All right, so that's a bit annoying. Price seems to just have pushed up away from our entry during the Asian session. There's not really anything we could have done there. In terms of what I would look for now, obviously price has still made this clear intent over to the upside. I would look for a retracement, maybe to take out some of these previous lows. I would want to see another confirmation on this though, because I wouldn't want to just enter here. So let's have a look. Can it take out the low? The reason I'm looking at this one, by the way, as well, is because it's the last bit of liquidity before the imbalance, which typically is a very reactive area for price. As you guys can see, it just did. There's no entry confirmation here yet though, so this isn't quite a valid trade. Maybe if it regrabs the low. Yeah, there we go. So price ended up just wicking the liquidity and rallying. There wasn't really an entry there. Okay, cool. And it has now also broken that liquidity level on the higher time frame as well that I said we need to be aware of, which was, if we zoom out to daily, it was this main daily trend high right here. And the reason I'm being cautious of this one is because it is actually within a daily supply zone as well. So what I'm thinking, we've had a wick out of daily liquidity into a daily supply. We could maybe see some moves lower from here. If we just mark on, we can get rid of some of this internal structure now, right? Because it's not relevant to the main trend. So you can kind of take two perspectives here, right? One of them being this was a change of character, and then this is just a pullback for sells. Or you could view this as from the perspective that this was a sweep for higher prices. If this is the bullish perspective, you would say that this is a break of structure. If not, this could just be a sweep for lower prices. So I'm gonna keep an open mind here, right? And basically just let price show me what it wants to do. If it presents some sells from here, I'm happy to take them. If it presents buys from here, I'm also happy to take the buys. So let's have a look how it develops. Fast forward in the Asian session. Right, so it has kind of started to shift bearish on 15-minute. Actually, I'd be more interested in buying here, to be honest. It's quite... Just notice how it's kind of a very corrective pullback. Price has taken out some previous lows, giving us a change of character right here. So yeah, this is actually a valid entry for the buys. I'm going to enter a buy here, and I'm going to enter on this demand right here, 1 to 3 TP, if price can pull back for us. Actually, no, so I missed the entry there. The entry should have been on this demand. Actually, if price can pull back into this area, it is still valid, so I'm going to set my limit here. Bit of a tighter stop on this one, and go for a 1 to 3. Okay, nope, so we missed that. Price has now broken the main high. This high here being the main high. I would still consider sells if price sweeps this supply zone and then starts to flip bearish. No, it looks like it just wants to continue up. Let's see, it's really just consolidating here. There's not really much I would be doing. Very clear bullish price action though, as you guys can see. Don't really want to be selling this, to be honest. Yeah, so now I would more so look for more buys up towards this high, which at the time was the all-time high, I believe. Could still see a retracement, but I would only view it as a retracement now, rather than a reversal. So yeah, this is my next idea for the buys. We've now had sweep of this higher time frame liquidity, clear reaction. Let's see if we can get an entry on it. Currently, I would need to see this structure broken for a change of character. Nope, price looks to be going lower. Next POI, let's have a look. Would probably be this demand down here. Actually, in saying that, we have also seen price take this last liquidity before the imbalance, so I would also consider buying from here. Let's have a look at the lower time frame. Yeah, so we've had a change of character there. Plus some imbalance. I'm going to enter from here. And we will see how this plays out. Right, so we're in the trade. Could have got a refined entry from this demand, but one thing I personally don't like to do is have a really over-refined entry. So in this case, this was the change of character. I don't really like having an over-refined entry because I find that if you do that, a lot of the times price is either just going to hit stop loss because you've tried to be too precise, or it's just going to miss you altogether, right? So I would more so like to enter on the general area, which in this case was the whole imbalance. Let's see if this can keep pushing. Yeah, nice. So trade hit TP there. Very nice stuff. Very simple stuff as well. Like I said, every single one of these trades is exactly the same. We saw price sweep higher time frame liquidity. We saw that M5 change of character, and then we saw price shift over to the upside and entered from that imbalanced area of demand, targeting a mechanical 1 to 3. This backtesting session is getting quite long, so before we end it, let's just go through some of the analytics so far. So far, we've taken 5 total trades in January. Which is about typical for me in the live market. I focus on taking only the highest probability setups. And as you guys can see from these results, right, we have an 80% 80% win rate. We won 4 out of 5. We made 11% and we only took 5 trades in the whole month. 11% is more than what the S&P 500 would make you in the entire year. So I always get this question, which is, you know, people assume that because you take more trades, you will make more money, which in trading is the complete opposite, right? Most of the time, if you're more conservative and wait for those higher probability trades, you're going to have a much better return than if you just take trades every single day, always trying to be involved in the market. Obviously, the average risk to reward here was 1 to 3. But yeah, overall, solid results so far. I will continue this backtesting session off in the next video that will be out on the channel, so make sure you guys stay tuned for that. In the meantime, if you haven't already, check out the 2024 Gold Backtesting series. I'll put the playlist somewhere up here. But thank you guys for watching. I hope you all enjoyed today's video, and I will see you in the next one.